Hey, what's going on, guys? Today I wanted to share a few strategies when it comes to setting an exit target when you are providing liquidity or if you are holding some spot bags, how to take profits on them pretty easily, and some of the few methods that have worked well for me in the past, as well as what I used to do and other methods that I found is just not as effective over time. So let's dive right in here. The first method is basically setting your exit target right before where the resistance levels tend to step in at. So this is really good, especially for altcoins, for charts that have been kind of grinding sideways for a long time. The classic example of this is ETH, just because over the last cycle, ETH just has not been as strong as the 2021, 2022 cycle, right? So we saw ETH basically bounce from like $1,500 all the way to like $4,000, bounce back down, and then bounce above it a little bit and then come back down. So in hindsight, we know that one of the best strategies to use is just to set our exit targets pretty close to that $4,000 level, right? The reason why is, again, if prices go up there and doesn't break the resistance level, you at least took some profit and then you're not watching your holdings draw back down like all the way back to maybe where your entry was. And this is one of the most consistent strategies that I found, even for pairs that end up breaking through. Not every pair is going to do that, right? There's always going to be pairs that fail to break out. And having a more conservative exit target allows you to secure profits more consistently and have more consistent wins, right? You might be missing out on some of the profits for the pairs that are breaking out, but at the same time, you're not going to be like back holding everything up and down. This is really great because I am guilty of like back holding too long too. I'm a chronic round tripper. That's why I like LPing as well. Sometimes like prices go up, prices go down. If I'm LPing, I'm profiting still in a lot of cases. I could drag down my entry by just compounding my fees. But if I am actually trying to trade or if I'm holding some spot backs on the side, I've found it pretty good to set more conservative targets. So if you see that there is that resistance level around 4K for ETH, then your exit target could be at around like $3,800, just as an example, right? So that is a more conservative exit strategy compared to like setting your targets too high or setting your exit based on a particular market cap or a particular multiple on your capital. It's really tempting to kind of think about like how big of a portfolio you want to have and then set a exit target based on that. But sometimes it's just not going to be that consistent or it's not going to be realistic, right? Let's say you need like 10x on your portfolio to make it to $1 million. You might not be able to do that consistently and effectively over the next, like, let's say 2 to 3 years. That's why I think it's really important to have a more conservative exit target. And again, that strategy is just very simple and straightforward. And we're basically setting our exit target right before where the resistance zone tends to step in. And I think over the last year or so, I did set like exit targets on different pairs like Solana that I was yield farming, for example, at around like $250. It happened to hit. And then I was able to exit my position for a profit rather than, again, just riding my positions up and down all the time. And you can see here in the last cycle on the weekly chart, about like $250 is where the key resistance zone was, right? That was the period cycle high, and that's where Solana struggled to break through in this bull market as well. We saw the price going to 250 and then briefly went to 300 and then come back down below that and then come back up to 250 again. So there was multiple opportunities to rebuy Solana and then also exit around that zone as well. And if you want to be even more conservative, maybe you're setting your target at around like 220, 225, especially if you are buying when the RSI is pretty low and then you're accumulating Solana near $100. I think a 2x target is also a really reasonable target to set, and it's going to give you a pretty good profit margin already. And you don't have to like sell everything at that first exit target as well, right? You could sell like 25% or 50% and then hold some on the side, especially if you plan to hold some over the long term. And we can look at the lower caps like maybe Link as well. You can see that over the last cycle, the price action was pretty wild. And then this cycle, it's a little bit more tame. But the first pump here the price action went to about like $20, $22, right? And one of the resistance levels that we can actually look at is that whole round number where it's close to like, let's say $50, $100, or in this case, since the numbers are smaller, around $20, right? So your exit target could have been like $18, $19, and you would have exited fine. And then if you actually miss that exit, you would have had other opportunities as well. Let's say your next exit target is around that $30 mark, maybe $28, because we are setting that target right before the resistance levels. A lot of people are going to be waiting to sell for maximum profit, but if you are waiting too long, a lot of times you're just going to miss that exit. So that's why I think it's a pretty good strategy to kind of set your exit target slightly below that resistance level. And again, if you analyze the price action over the last cycle, this $30 to $35 zone tends to be the resistance level for Link in particular, right? So maybe having more conservative targets means moving that down a little bit. And this is especially true if you guys are buying Link near like $6 to $10, like where it is trading right now. So if we are putting this into practice, one of the first key resistance level is maybe that $15 to $20 zone. At $15 is already a 2x where you could consider some profit taking opportunity. And then at that $20 is where sometimes the price actually does get rejected back down, right? In this first pump right here in the 2020-2021 cycle, it did get rejected at that level. Same thing back here in 2024. And then it did trade above that, went to about $30 there before actually cracking back down. So maybe the first target is around like $14, $15 if you're looking for a 2x, maybe around $18, $19 if you want to be a little bit more aggressive. And then the next target would be around like $28 if you are not trying to trade the breakout or you're trying to hold for that breakout. So those are really good and conservative targets that is easier to hit and easier to achieve, in my opinion, compared to just setting a number that is a little bit more aggressive, maybe all the way at $100, right? It is tempting to do that, and it is kind of logical to try to expect things to grow in value over time. But like what we saw over the last cycle, sometimes that just doesn't happen, and it is helpful to have like some exit targets midway so that you are actually locking in some profit on the way up rather than, again, just riding everything up and then down. So that is a strategy that is really great for pairs that are expected to move sideways, or at least to set more conservative targets for your first one or two exit targets. But if you want to bet on breakouts, or if you are looking for tokens that are trending, the better method might be to use the fib retracement tool. And if you guys have TradingView, it's this tool right here, right below the line. And then the way I like to do it is I like to look at this previous local high, right? So not like the very recent price action, but the local high before that. And then I'm going to click and then drag to this bottom that is just before that local high here. So I'm using Hyperliquid as an example, and you guys can adjust to the settings that you like, but I like to set mine to be the levels where a lot of traders use, just because a lot of people are trading around these levels. And then if I know that, okay, people are setting their exit targets around there, then I can front run that a little bit if I want to be more conservative, right? And these are the levels here. So you can pause the video and set that if you like. And some of these are buy levels instead of the sell levels, right? Like this 0.382 retracement level, and then 0.5, and then the 0.618. Those are all reasonable entry targets that were eventually hit, where you could be setting your entry targets as well. And for the extension, we see the 1.618 and then the 2 level is between this $90 to like $110 for hype, right? And we know that big round numbers tend to be a big resistance zone. So $100 for hype, that is probably a zone where it's going to struggle a little bit. People are taking profit. So then maybe a more conservative target could be around like $89 here, right? Just below the 1.618 level. Especially if you guys bought hype below $40, then you are looking at least a 2x that you could be securing some profits on, right? So this tool is really helpful, especially if you are looking at different coins and there's no historical price action of where the price might go. then you might be like setting your exit targets along these levels. Maybe you're setting some at $90, 110, or like 120 here, or like 125 here, and then maybe 180 up top, right? So you're kind of laddering out and then you're setting the target all the way up there. So that is a really useful tool if we are in that price discovery scenario. Now let's look at another scenario. Like let's say you are holding a longer term asset like Bitcoin. A lot of us are holding Bitcoin for years and we're not planning to sell most of our Bitcoin, if any at all, right? So a lot of people are treating Bitcoin like that. And it's not really that suitable to be using that conservative model for Bitcoin, right? Because oftentimes you're going to be selling out of your positions too quickly unless you are using perps or you are using some sort of a leverage trade. So let's say you are in a bull leverage strategy using DeFi and you might want to be setting some more conservative levels, like let's say around 100K, that could be your first target. So my exit target could be at 95K if I want to front run that a little bit. But for the longer term position, one strategy that we could use is the trend reversal strategy, right? So what we want to do is we want to accumulate these assets when the prices are low. Now prices are pretty low in my opinion. The weekly RSI is below 50 and I use the 25 period RSI, so it's a little bit less sensitive. I find it work better for me. And then when it's below 50, I'm doing my best to accumulate more if I can. And then what I want to do next is look for trend reversal signals. I could either look at like the momentum profile, I can look at MACD, I could look at like the different patterns on the chart, or I could use the moving average crosses as well, right? What I found to be more consistent for Bitcoin is that 20-week EMA crossing that 50-week simple moving average. So it's this dark blue line here crossing the orange line. And when it crosses below, especially when the prices are high already, it means that prices have been grinding sideways or trending down slightly for a few weeks already. And that could be an earlier signal of a trend shifting. So at that point in time, if you want to take some profit on your Bitcoin, then that could be a more objective moving target that you could use. This is especially good if you expect an asset class to trend for a long time and then you want to get out before the trend shift too much, then that is a type of exit strategy that you could use. So that is really helpful. And even in the 2021-2022 cycle, you would have been able to take that exit signal. Of course, everything is easier in hindsight. So there will be like false signals. For example, back here, prices actually bounced down and then bounced back up and then it crossed up and down a few times before prices grind higher. And in my opinion, if you are using that big of a moving average cross, then you want to look for the cross when the prices are high. So it doesn't make sense to be like selling out of your position when the prices are not that high and you expect the prices to climb higher even though there are some indicators that are flashing, right? So you got to put the context into mind, and the more you look at charts and the more scenarios we analyze, then these trends and patterns become easier to kind of look at and kind of see what is more likely to happen in the future and what is the better risk and reward. At the end of the day, it also is about risk and reward. I did talk about like setting a 2x target. That is pretty popular for a lot of the riskier assets that you are trying to trade. For example, I traded some NFTs in 21 and 22. A really popular target, again, is just that 2x target because you are able to completely de-risk if you sell like 50% of your position, right? And all these concepts do apply for if you are yield farming as well. Let's say you're trying to yield farm an altcoin pair. Let's use Pendle as an example, Pendle and ETH. If I want to set an exit target for Pendle to ETH, I'm not going to set it all the way up there unless I'm following a trend reversal strategy, right? Unless I believe that Pendle is going to trend up significantly against ETH. If I actually entered down here, then I might be considering that strategy. But if I want to have a more conservative exit target, again, I'm going to look at like this really clear resistance zone, and then I'm going to set my level slightly below that, maybe 5 to 10% below that, just to not miss the target. And that is a really consistent way to go, in my opinion, rather than, again, just setting your targets all the way up high, or you're using some other strategies. Like, for example, you're comparing the market cap of different projects, I think that is a little bit riskier to do because it's very easy to have an inflated market cap number, right? I used to do this as well, and I find it a little bit more harmful than helpful, to be honest, just because sometimes the target is just too high and it just never reached the target. If you use this pretty often, you know that most of the coins that you tried it on probably never ever actually reach the target, right? Because project A is not the same as project B, and it's not a guarantee that the market condition or like the price action or the fundamentals eventually would match that condition that put the project B into that high price in the first place, right? For example, these are some of the top comparisons. Let's say Solana compared to ETH. If Solana has the market cap of the current ETH market cap, then we're looking at 300 something dollars for Solana, which it almost reached this previous bull market. We did touch $300, I believe. But again, at the same time, ETH was also higher during that point, right? So if you're looking at the all-time high, we're looking at a price of about $1,000, right? Of course, that is like something that could happen in the future, but that is going to be more of a long-term target and a greedy target that might not ever hit. So we want to make sure that we're not actually like banking everything hitting there, and we're not going to be like holding the bags up and down if we don't do that. I think it is a little bit more dangerous to do. Of course, it's pretty fun to do. And I think it is good to kind of look at like what's the potential of an asset to be able to grow. And I think it's a little bit more helpful for like the lower cap projects or projects that has a lot of potential, but maybe people just haven't found it yet, right? Maybe you could compare like something similar and you could set your exit targets based on that. But again, it is a little bit more dangerous. It's a slippery slope where you are setting like a higher and higher target. You might be comparing the projects in the wrong way where it might not actually reach that valuation in the first place, right? Let's say hype compared to BNB. If hype catches up to BNB, we're looking at about 5x. I think it is possible, but I'm not going to bet everything on that to happen, right? I'm not going to like hold all my hype until that price, just because again, the market could shift anytime, the fundamentals could shift, and the market could be weak at any time as well. And compared to the all-time high, the number is even higher. Of course, some of these numbers look pretty insane, but it could happen. And I think that's what is pretty attractive about crypto, right? The potential growth. And especially for projects like Hyperliquid that has been like dominating over the last 1 to 2 years. So just a quick recap, we talked about a few different strategies. The first one is just front running the resistance levels. And you can use different tools to look at like resistance level. For example, just the historical horizontal levels of where resistances were based on the previous price action, or like the big round numbers or fib retracement. That's the second thing that we talked about, right? And then the third tool is the trend reversal signals using, for example, moving averages. And then lastly, the market cap comparison. You could also do that, but just be careful of not like setting the targets too high because some of these targets might never actually hit. And I'm guilty of that as well. I've set some of the targets way too high, and I ended up holding on to much more than what I would have. I have taken some profits over the last bull run, but I would have taken more if I didn't just maybe inflate the numbers a little bit too much. And if you want to learn more about DeFi, check out the links down below. There's a free course that you could take as well. I think it's about like 2 hours, something long, and it's going to give you a really solid foundation heading into DeFi so you don't make all the costly mistakes that a lot of people make. Thanks for watching. I'll catch you on the next one.